Hello everyone, welcome to another weekly market review. Today is the 23rd of March 2020, and what an interesting time to be alive. Testing times, but I hope you are safe, your families are safe, and so is your capital. You've been watching us, I'm sure it is like that. Here's the total market cap chart on the weekly time frame. You can see we are within this range, this 2020 yearly open, these lows here, and the lows of 2019, basically the 2019 yearly open. Most highly likely scenario for me is some kind of a consolidation within this, and if you do want to look for upside, I think you should be only positively looking for upside once this level is reclaimed and turned into support. For now, since we have dropped where we have, I think for at least a little while there will be a probability of a range play scenario between these levels. What I would do is I'll switch on some other levels and I'll go to a lower time frame. But on the previous week, basically, one interesting thing we've done is we've tried to reclaim this level on a weekly basis. We have closed above it. So even though we've had a strong drop, we closed below this level, we wicked below all these levels up here. But the previous week, we have reclaimed this weekly level. I think it's not a very major level. It is not something that is highly significant, because you can see that there is very little price action over here historically. So what I would say is, until a major level where there is price action, until that is reclaimed, there is actually no need to be looking for further upside. What is most likely is to watch this level, this 158 level, and if this does get taken out, then we should be looking for price to come back at least to the top of this 130, or actually to start trading within this range. So I'm gonna go to the 4-hour, and essentially what I'm looking at, so this is basically a historical volatility. So you can see on this drop we had massive volatility, and what you can see now is that slowly this volatility is starting to dwindle. After any big move, we saw this big move right here, and then slowly the volatility started to dwindle when we had a couple of weeks of sideways going on. So where this kind of consolidation would happen most comfortably for the market, it would be back at these bottoms. This bottom level, once we do end up breaking this big weekly level, basically we have found support there for now. But you can see that as soon as we start to break this, there is actually a nice trade to be had to trade it back to 150 billion once we have a confirmation and a break of these levels. But most likely, if there is to be a consolidation, it would make sense for the market to do it closer to the bottom. So I would anticipate a trading plan for this time frame to be to trade this break, a confirmation of this break, to be able to trade this down here. Apart from that, currently, as of now, there is no trade. This is essentially a no trade zone. If you're not short already, there was a probability to take a risk adjusted long, but on a mid time frame, you can see that we have made a lower low and a lower high on the 4-hour. So we don't have a confirmation on a break of this. We will be trending downwards even on a mid time frame like a 4-hour. So for now, I'm expecting volatility to end up reducing after a big move that crypto has had. Traditional markets are still getting destroyed. So it is pretty interesting that gold and crypto since the 13th have kind of shown signs of a possible bottom. So should not discount it. I think everything at this point should be used only upon confirmation. You want to confirm that there is further continuation of downside, this 2019 yearly open, these levels need to be taken out on a closing basis. Until then, we are at a possible floor where some kind of consolidation needs to take place. And in these levels, I think for now this is close to the top of the range and this is close to the bottom of the range. And if you have watched my range videos, you should know how to be able to trade this range. If you have not, then I suggest that you go and watch them so that you can have a game plan of how to be able to trade a range. There is different ways in which you can map out this range. It depends on your time frame. You can either do it straight away from the higher time frame levels, or you can do it straight from the wicks. Just look at price and look at levels wherever levels are getting highly respected, or you could be doing it from the candles. So look at it on a 4-hour time frame and think about where price is really respecting these range levels, and whatever you do end up finding fits well, make sure it's either wick to wick or it's candle to candle. So either that or it is from a big level to a big level. So this is how you would end up building your range. And you can see the yearly open and the 2020 yearly open and the 2019 yearly open. It gives quite a good range for the total market cap, because we did end up finding resistance here. The 0.5 level found good resistance. There was a swing failure into this 0.75. We swing failure at the top of this range, and of course failed to hold this 0.25 level as support. And now we're trading it back down. I would say as soon as we do end up losing this weekly support, you trade it on to the middle of the range. And if we lose the middle of the range, you have, I think this 150 is the strong psychological level, but once this is lost, you can trade it back down to the 0.75 and possibly back down to the 2019 yearly open. So I think range play is on now, guys, for this market, and possibility of losing volatility is also back on. So stay safe, stay savvy, and again, like I said last time, don't lose your money. Preserve your capital if you have preserved it all the way down. And in fact, if you have made some money with us on the way down, preserve it and use these rules of range play. Go watch the range play video if you haven't, and you'd be able to make some money. Even if we do end up losing volatility, there is still a decent probability of tracking price in an intelligent way and using it to your advantage. Here's the altcoin market cap chart. I've explained in detail what the total market cap chart is doing. That is more clear, and there is more precise price action there. So I would suggest you use that to be able to trade the range that I was talking about. But just to quickly reiterate a couple of things I want to show on the altcoin market cap chart. One is that we did end up getting resistance from a level which previously was resistance, and I want to show this channel. This has been very, very significant, this channel. I don't think you will see this on crypto Twitter, but this is a very powerful channel. We did trade this. We trade this, made this trade from right out of this channel and traded it all the way to the top. Also shorting pretty much all the way down, at least to this yearly open levels. but this channel has been so significant because the drop has led us right to the bottom of this channel. Someone tells you technical analysis doesn't work, this channel is a live proof of that. This is the entire market cap of alts, and it is so well respecting this one channel, this one single channel. And it is so funny, nobody's trading it, possibly that's why it's being respected so well. Anyway, what did we do? We found support at the bottom, tested the top of the channel, found support at the middle of the channel, tried to break out of it, got a strong rejection, and you can see we did not make any daily closes outside of this. So if you do want a game plan, I'll go down to the 4 hour. If you do want a game plan for this, I think that if you end up breaking out of this channel, finding support on top of this yearly open, you can trade it up to the weekly resistance. But losing this 2019 level, you can go back down and possibly test the middle of the channel. So this is the couple of things I wanted to show on this chart. Apart from that, just use the total market cap chart as a compass, and keep an eye out for this channel. Low volatility, again, it's declining. I'll quickly show you here. The volatility is declining again, so it will eventually start to decline if we are to consolidate and build some kind of a consolidation here. So manage your risk and manage your size, everything accordingly. Don't be over leveraged. Don't try to trade breakouts when volatility is low. Try to short on bounces and try to long when you find strong support. Even if you get small plays, you are able to get those. You have to be very sharp when you're playing ranges, guys. You can't be lazy, you can't have bad entries, because when volatility is low, it can easily come back and take you out. When price is consolidating, there is not that much momentum to take it in the direction where you want it to. So yeah, just be careful of that, and good luck. Here's alts against BTC, just a quick look at it. We have traded this fractal pretty well. Currently we are at this consolidation phase. It is not necessary that this will break down over here like it did last time, because you can see the shape of the bottom is quite different, but this support, it's getting tested a lot, so eventually should watch out for it. And if it does break it, it is possible that all BTC pairs also have to head lower. But what more I wanted to show was that after the bounce, there was still a period of 2 or 3 months of a lack of volatility. It's pretty much sideways. So if you do have to trade crypto, I think I would suggest that you focus on USD pairs, unless there is something that has good momentum and you are well hedged for any kind of extreme downside and you want to be playing the market. Otherwise you should know that it is quite probable that this period of low volatility between these two levels over here, it will carry on. So something like that, so again, it's just to highlight that don't be over anxious, and just because you're at home, there is no need to overtrade. You can spend your time learning and reading and doing new things, and if you are not proficient at it, or you can spend small amounts of your money to be learning to trade markets of low volatility. Either way, for now, just keep watch out for this, and do know that this is the kind of range that we are in, and this movement of high directionality, for now it has lost its probability until we break back at least above these levels here. Here's Bitcoin on the weekly time frame. If you are following me on Twitter, you do know that I did send out a very significant warning when price was up here, and I think people were still confused. They thought that a bearish retest of a significant breakdown on low volume. It has to have some kind of a bullish narrative, but really, guys, like, this was a strong level, and all we did was come back up to retest it. And now you can see what kind of a rejection we have gotten. Not only that, but here's the significant weekly level that we had. This is the 2018 floor, and what I would show you is that we failed to close the weekly above it. So that is not a good weekly close, guys. That is not something you want to see on a higher time frame, because essentially on a weekly time frame, for looking for trading a higher range, you would possibly need something like 6140, for the weekly to be closing above here. But we were so weak that we basically tested this as resistance on a weekly time frame. So for me, that is a bearish sign. There is nothing bullish about this candle and the price action that has followed. And that is why the total market cap range, I have been looking to trade it down, because I think once you do start finding resistance here, let's try to drill down to possibly the 4-hour. Okay, so here's the 4-hour chart. There's a couple of levels on the 4-hour, but what I would say is that once you do start finding resistance here, you can see this is a significant 4-hour level, but you can expect price to come back down and start testing these levels right here. So I think a break of this 5839 and finding resistance here, a break and retest, you can start trading it down to first these lows, this 5k level, maybe this liquidity down here. And if we are really heading into a longer consolidation, then of course price would head back to test this liquidity and maybe back into this range. So you have to take it level by level, but on a higher time frame, on the weekly, this is not looking good. This is basically had a bearish retest with a very strong rejection, and on the weekly we have closed below this big weekly level, which we failed to reclaim. So for now, there's nothing positive about it. For real upside for Bitcoin, we have to reclaim this. This level. There's the yearly open levels, which are somewhere close to 50. We have to reclaim these higher levels if you want to look for any kind of upside, guys. Until then, it is quite possible that we move into a consolidation, or if this is going to get bad, then it is possible that once we break this yearly open level, we have to start looking for levels further below. But again, this is what it is, guys. This is how to play this range. When we are reaching extremes in price, you must look to hedge any kind of exposure. I did have long exposure here. I built some long spot exposure here. I was able to hedge it on this way down. So now I'm comfortable with whatever price does, because this initial volatility is quite high, So I know people who are stuck up here with longs up here. So you're gonna have a tough time, guys. If you think price will just come back up and let you exit, I would say for now the probability of that is lower than higher, So again, follow the total market cap chart and essentially trade the range, guys. And losing this 5830, finding resistance here, you can trade Bitcoin back down to these levels that I highlighted. Here's a look at the Nasdaq chart. So what you can see is I highlighted last week that we have not closed the weekly outside of this channel, and you can see this Monday we basically smashed right back down. And if you want to see how significant this channel is, this is all the way since 2010, guys, and we haven't had a weekly close outside of this channel. um, this week essentially could be it, because more than this, I think you have to look at the chart of the reported deaths, and that chart is absolutely parabolic right now. And until that stabilizes, it is very possible that this is not going to stabilize. What else you have to understand is that the market is intelligent, the market is smart. Of course, it is irrational also, but it is pricing in the longer term effects and the longer term consequences of what is possible. So we have a 31% drop already, and obviously breaking out. This is a strong level. 6300 is a strong level. We had a decent amount of price action here. Here is liquidity at 5600, but if we really want to zoom out, then after this liquidity at 5600, we have these tops here, and this is something that I would not want to see broken, guys. Why? Because this is basically a 50% drop to these tops. Below this is absolute Armageddon, but this is a recession, a possibility of a recession once if we do hit these tops, and we can move back out. But beyond this is basically depression levels, which just needs a renewal of society, of systems, of basically mankind. It's a very, very different time if we start breaking below these tops. But I have another fractal chart from 100 years ago, which shows us the potential that we may be able to find support at these tops if we do continue. And a game plan for this, there is no game plan for this. If you're out of this market, I suggest that you are lucky and to stay out. Don't be a hero. This is a train that has not been seen even in 100 years. You don't want to come right in front of it. More than this, watch the chart of the total number of infections. Essentially, a lot of countries now are going to head into that period where there will be even more mass panic. So it is possible that that panic enables us to make this next move down also fairly quickly, before the summer jumps in, where we will then start to have a reduction in infections and increase in recoveries, and hopefully by then the market can stabilize. So just quickly look at an interesting fractal. So this is what I call the Dow flu fractal. If you can see the dates here, this is from 1918 to 1922, the time of the famous Spanish flu, the big flu of the last century, which took a lot of people with it, possibly I think about 5% of the population. So you can see something similar in terms of structure, but not the drop. This drop is just reflecting the sophistication of the markets. Markets were not so sophisticated back then. Right now we have big money that have models and prediction models about what is possible with the kind of pandemic that we are experiencing, and this is a front run of that. This is just a simple market decline because the market was not so efficient. But if we look at it in terms of magnitude, it is possible that the market has to, if the market has to price it in, it prices it in towards about the same levels. We cannot say for sure yet, but this is essentially what I'm looking at. Also very quickly, I want to drop a fib here, from the 2008 lows, to look at how perfectly these levels match. Essentially these levels match to the T, guys. This 15,300 is a 618 big level. This is a big level, and currently we are at the point 0.5. You know, I don't know if we are to get a reaction. Whatever kind of bounces have just been wicks. You can see, apart from whatever we had in March, late February, March, that was essentially the only place if somebody was looking for downside to manage risk. And if you remember, I did highlight it, a big monthly level where you could be short. But now I think any kind of short is difficult to trade, and it is a crowded trade, but it is what it is. Price can continue as it has to, but what I wanted to highlight was the magnitude of what happened 100 years ago when there was a similar situation. So that does at least point us to this consolidation lows. Also matches up with these tops from 2017. So it's possible, guys, that our eventual target ends up coming here, and hopefully the market finds support here. There's still a lot of volatility, but if you're not short, this is pretty damn hard to catch an entry, guys. Because this can just keep going. You can be late, it can just catch you on the wrong side. So I mean, it's about 30% too late. If you're looking to get into the market, I would suggest that you need to wait. Look at the infection rates if you want to be looking to get in. Here's the oil chart. I had drawn out this fractal last week for you. I think we were trading at about 28.30, and I had shown you the possibility of hitting all the way to 15, guys, and we have touched 20. Essentially there is one other bit of TA that's possible here. Let's look at it. So let me go to the quarterly chart for oil. So you can see down here we had quite a clean range, with the mid level getting respected pretty well. 0.75 is the top and the bottom of this range. We have re-entered it. We just tested the middle of the range at 20. So if you do want to long term look at oil and play oil, you can keep a lookout for this range and watch what price does. I think it is still possible to reach the teens, 16, 17, because this global lockdown can go on for a long time, and who knows if we have to make a complete crash cycle also, because demand will keep reducing. We do not know how severe it is going to be and how long we have to remain quarantined, but this is an asset that is going to be ready to take a big hit, and it already has, but this can easily carry on, guys. But this is a very nice range, so I would say to keep this in mind, and eventually once we do stabilize, you can use it to trade. Here's gold on the monthly time frame. You can see this is where we were looking for rejection, the yearly open. Last week I did tell you to look for further downside on gold. We're finding support at a strong monthly level where we've had about 3-4 months of price action, but I think once this is taken out, we would be heading back down to the further monthly levels. Currently we are in a deflationary environment, but I think once there is a lot of money that is printed, eventually we could head into an inflationary environment as well, where we would know, if gold is able to preserve its status as a hedge. I still think it is possible that Bitcoin might end up serving as something that may prove to be more superior, but in terms of size and market cap, gold would still be of value. For now, I think for volatility and for trading, they are the charts that have more directionality, but this one is there to watch. There's a key support level, this 1460 level, and breakdown of this has a thin air all the way till 1400. So just keep a lookout for that, and once we do end up heading into the inflationary aspect of this market crash that we have, it will be interesting to keep a lookout for this chart and to see how gold eventually reacts in the testing times for all the gold bugs. They're the ones who are always projecting and promoting it. Let's see if it serves its function and its purpose. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!